All right, guys, welcome back to Profit in Peace. Today, we're gonna have an interesting session together. Today, we're gonna talk about wartime, gold volatility, intraday trading, and also auction market theory. Once again, my name is CG. Welcome back to Profit in Peace. I'm the founder and also the creator of the Profit in Peace program provided by forex. Now, a little bit introduction about myself. I started to pick up trading 6 years ago during COVID time. So 6 years ago, during COVID, I am being hit hard, guys. I'm being hit so hard. I lost my job. I am burning my savings. I am way behind my bills. And during that time, I am super desperate. I just feel like dying. Okay. And it is so anxious for me during that time that I just couldn't find any way to make money. So I've tried a lot of things. I've tried to, sell something online, drop shipping. I try to sell Chinese medicine, and because of the desperation, I'm being scammed many times as well. So it is a very, very desperate time for me. And one day, during I think I still remember, like between 2022, during the COVID days, a friend of mine actually contacted me and say, hey, I know that you can talk. I know that you can explain things in a very easy to understand manner. So are you interested to come to the broker house and work for us, work from home? And to me, my first question would be, oh my God, I finally got a job. And then the second would be, but I don't have any certificate. I didn't study finance. And am I qualified? Which is a self-doubt, right? And he just told me that, okay, here's what you need to do. You need to prepare some education materials. You need to read about what is going on in the market. And your main job is to really educate, provide our existing clients about, what's going on in the market. And then eventually you need to teach them something about technical analysis and fundamental analysis as well. Are you in? And I say, what is the salary? And then he say like around 2,000 US dollar. I think, oh my God, during that time, being able to make $2,000 during desperate times, that's a lot of money. It's not like make you rich kind of money, but it is a money that makes you feel, well, it is a life-saving money during that time. So yeah, I took up the job. And then that is where, I start to master not trading first. I start to master the art of fake it until you make it. Can you believe that? So what do I mean by I master the art of fake it until you make it? You see, 6 years ago, I don't know anything about trading. I don't know anything about fundamental analysis. I don't know anything about auction market theory. I just don't know anything. Point blank, guys. I'm a salesperson, okay? I am not a trader back then. So my job is to wake up, every morning 6 a.m., which is really early. I usually, my general wake up time is like 9 to 10 a.m. And during that time, I need to wake up at 6 a.m. and start to give, Zoom meetings and courses at 7 a.m. because the crowd that I'm serving is from United States and Europe, okay, from the Western country. So I need to wake up at 6 and start teaching at 7, which means that for the folks at US, they are actually listening to me around, I think, 7 p.m. after their dinner time. So yeah, it is that is where I started where I started pick up trading. And the passion builds up. It started just with me wanting a job, and then it started to build up, pieces by pieces. I I'm an extremely curious person. So I start to get serious, and I start to appreciate the beauty of technical analysis. I start to appreciate the beauty of the art form, of technical analysis, fundamental analysis. And that is where, that kind of craftsmanship thing start to, grow up. And I start to like really put in the work to sharpen everything. Eventually, I became a trader myself. Now I am a founder of a program called Profit in Peace. I have my own YouTube channel, and I'm a strategic partnership with forex Trading Academy. And yeah, it was a blessing. Life. There's a one favorite movie that I watch when I'm young. It's called Forrest Gump. And there's a famous quote in the movie. It says that life is like a box of chocolate. You don't know what you will get, right? You don't know what you will get next. So yeah, life is like a box of chocolate. You don't know, what one turning point will lead you to a whole new different pathway. To me, COVID is a curse and a gift at the same time. It's a curse because that it actually pushed me into a very desperate rock bottom point of my life. It's a gift that during that turning point, it introduced me, it forced me to learn, what is trading. So yeah, that is where not only I learn, about trading, but I have a much more grounded view about, what is going on, how we can perceive life better as well. That's it for now. So yeah, thanks guys. Thanks for coming into the live stream. I know that it's not always a crowded stream. I know that you guys are not always free to come to the session to learn with me, to trade with me, but still, I appreciate you. I thank you for coming into this small little space right here to try to profit in peace with me. So therefore, thank you very much. Okay. So right now, we're gonna start our class for today. Now let me see that how many person that's actually in the class today. We have Christina, we have Manson, we have Charles, okay, we have Grace, okay, coming into the class. Cool. Welcome back to the class. And right now we're gonna start. Okay, we're gonna start to really try to understand, what's going on in the market today. So I'm gonna start with, this quote. You never want a serious crisis to go to waste. And many people out there, thinking that this quote is actually by Winston Churchill, which is the former famous Prime Minister of England, from London, the Great Britain. But actually, after some fact check, it is actually not from Winston Churchill. It is actually from the previous White House Chief of Staff. His name is Rahm Emanuel, okay? And he said this during the 2008 financial crisis. And why did he say this? He said this because that during the financial crisis, the government is going through a restructure and implement new kind of management system, etc. So it is like a quote that is so powerful that is telling us you don't want to waste a serious crisis. So my message to you is this. So if currently in your life you're facing financial crisis, if currently in your life you're facing health crisis, if you're currently facing relationship crisis in your life, well, my message to you is this. You don't want to waste a serious crisis. Why? Because every crisis lies opportunity. And in Mandarin, as a Chinese, we have a famous quote as well, 转机. So this is what I wanna teach you guys. Okay? So this is what I want you guys to understand. So I'm not saying that it's gonna be easy. I'm just saying that during the difficult times, seek opportunity. Because during difficult time, it's either you are being beat down by it or you actually profit from it. And we, as a person that still has hope for the future, we want to make full use of the crisis, right? Just like how I make full use of the COVID days. I'm given an opportunity, I grab it, and I turn it, I monetize it. Okay. Now, speaking about crisis, recently, these few days, it happened, a world of crisis that shocked the entire world, right? It is a crisis that moved market. And what crisis that I'm talking about? Well, the crisis is actually about what happened 3 to 4 days ago, where a major US-Israel strikes on Iran, right? There's a series of rapid-fire events, and that is reshaping the entire global landscape. And more importantly, Iran actually retaliated, counter-fire, and markets actually reprice risk in real time. Okay, this is the crisis time. And well, what happened in the market? Well, gold actually surged for 2%. Okay, so why is gold surging 2%? Well, because capital financial market usually move to safety, with spot price hitting nearly 5390. What does it mean? It means that during turbulence times, people collectively as a civilization tend to have a deep sense of belief and security towards spot, especially gold, right? So this happens all the time. You see, it based on crisis, and the gold historical data. I want you to see, back at 1990s, right? There's a Gulf War, and during Gulf War, gold surged for 20%. Okay, you can check ChatGPT, you can check Google, you can do your research. But during Gulf War, gold actually surged for 20%. And during 2001, which is the terrorist attack in Empire State, right? 2001, which is the 9/11, gold actually surged for 7%. Okay, and 2003, the Iraq War, and during that time, gold actually surged for 13 to 21%. And 2022, the Russian and Ukrainian war, gold surged from 11% to 15%. And today, 2026, the Iran escalation, gold, is actually surging between 2 to 3% as an initial move, right? So this is what I'm talking about. Now, based on historical data, 1990s and 2026 all share a common trait, right? Different crises, but same capital behavior. When war happens, gold price surge. Okay, it is the same that is happening right now. Now, what I do with this kind of data is that I try to really understand by using artificial intelligence. So I've collected all the historical data, and I feed it into my artificial intelligence model, and I try to really understand what is the optimal window for us to trade, during crisis like this. So what I did is that I take the data that is from 1990s and all the way from 2026, and I want to calculate the window. All right, you see that it's something like, I try to manually create a MACD or RSI myself. Okay, and if you really trace on historical data, and it always is like this. For the first 3 days, it's gonna be the shock phase. All right, it's gonna be the shock phase where the market just surge like boom, it's gonna fly, few percent. So for the first 3 days, it's always the shock phase. Okay, and then from the 4th days until the 10 trading days, which is 2 weeks time, it is the opportunity window, and that window start from today. Okay, the crisis happened at Saturday, Sunday, and yesterday is the 3rd day. All right, and today is the 4th day. So 4th day actually marks the trading window. Okay, it's the opportunity window where it gonna have an increased trading activity, more investor join in, because they don't join in after when the shock phase is where everybody is like, oh shit. Okay, and during the opportunity window, people come down and people are willing to buy the ticket. Let's come in and see, can we make money together, can we make full use of the crisis? Okay, So asset shift speed up and price swing create trading chances, right? The market basically is trying to find a new price level. And I'm going to show you in the chart later that it's kind of obvious that the market is currently finding a new price level in the gold pair. Okay. So number 3 would be extended uncertainty for the second week to 8 weeks onwards. Well, this is actually, the phase that only continues if the crisis worsens, right? So for me, we don't pay attention. We're gonna skip the first 3 days. We don't touch it. And for the third phase, which is the extended uncertainty, well, you and I, we are not God, and we are definitely not Donald Trump or some kind of world leader that understand the next move, right? But for us as a retail trader, we just pay attention on the 4th day until the 10 days, okay, starting from today. All right. So if you guys understand what I'm trying to tell you, click yes in the chat box. Okay, so this is the crisis reaction window, aka CRW. Okay, this is, and the CRW actually start from today. Okay, today is the first day of CRW. Right? So currently, we are at the CRW, which is the first day. Not March 1, it's actually 3rd of March. Okay, so we are not in the shock phase anymore. And what I'm gonna do is that I'm going to start an experiment. All right, guys, I'm gonna start an experiment during this phase. It's called gold under fire. Now, what is gold under fire? Okay, gold under fire is where I am willing to take a $3,000 small amount of deposit that I'm willing to lose it all as a trading experiment. Okay, and I'm going to show you guys that, the proof of my deposit. Just a moment. Oops, sorry. There you go. So here's the proof of my deposit. I've deposited the fund, which is from 2nd of March. Okay, 2nd of March 2026, yesterday. And this is specifically for, this experiment. Okay, for gold under fire. So what I'm going to do is this. Okay, I'm going to trade volatility in real time. And I'm going to try to really make full use of the volatility during the opportunity phase. Okay, and what is the trading experiment? Well, the experiment is going to be like this. Okay, the account setup is going to be $3,000. The instrument that we're going to look at is specifically locked at gold. Okay, intraday auction trading. And the objective is simple. We want to trade volatility during the crisis reaction window. And this is the important part, right? The risk framework, the risk rule. The risk per idea that I'm going to use is actually 7 to 12% account exposure. It is considered high risk trading, and I use it for intraday trading only. Okay, I use it for intraday trading only, and I trade, that is aligned with active auction phases. And my account is treated as finite experiment capital, which means, guys, my maximum predefined loss is the entire account. It is only not over 1% of my entire portfolio, which means that I am actually taking 0.3% of my portfolio just to play this experiment with you guys. If I lose everything, it's fine. If I manage to flip it, then it's fine. All right, so this is experiment. So the campaign duration, it is going to be 10 trading days. I call it the crisis reaction window, CRW. And I'm going to only extend it, only if volatility regime persists. Now, here's the thing. I'm going to try my very best to use auction market theory, intraday trading, and the volatility of the gold market to flip the $3,000 account with really high risk exposure. If I burst the account, we're going to reflect and learn together. If I manage to make money, well, let's see what we can do to celebrate. All right. So are you guys ready to analyze the market together? If yes, click yes, right? So risk disclosure, this is a live trading experiment, and the account is funded as marketing budget, right? I see this as a marketing budget. It is not an investment account, okay? For me, I am fully prepared to lose the entire $3,000. I don't want you to copy the trade. And all I'm saying, this is not financial advice. I want you to think independently, trade responsibility. And right now we're gonna start gold under fire live experiment with you guys. All right? Okay, there you go. So I'm still trying to work with the interface. I'm thinking of getting a second phone to really, mirror the MT5 that you can see. So far, do you guys like the new interface? For me, I personally love it very much. You guys can see it. So here is where we're gonna really start to analyze the market and see, do we have any potential, any potential, opportunity going on. So right now, music up, and then let's go into the market and enjoy riding the wave of the market together. All right, close this. Okay, so right now we are currently looking at the gold market, and I've met out the chart yesterday, so I do understand that what kind of reasoning and logic is going to put into the place for me to really try to make that profit. Now here's the good news, right? The good news is this. Okay, currently it's either we are betting on the strength of the buyer or we are betting on the strength of the seller. Now currently the seller is showing strength that is going down, but for us, as an option market trader, for me, in order for us to really place a trade, I am going to really need a second confirmation. Now right here we already have a confirmation in this current price range right here. Okay, now if the price after this expansion and then it start to go back here to test it, and then we might actually if it show no signs to actually climbing back up, we can actually place a good trade. Okay, so right now let me take a closer look. You see, after this it is still climbing back up, but it didn't show a really strong power of climbing back up of the seller. So currently the price is actually finding a new space for it to trade. So let me go to the 1 hour and take a look. It's currently forming a lower lows. Seller momentum is gaining its power. 5 minutes. After the third candle, if it didn't manage to actually climb back up here, I will do a short trade for this zone right here. The pullback is strong, guys. It is still strong. You see, the pullback is kind of strong. So we'll see how it reacts, after this candle. If the third candle didn't manage to, close around here, and yeah, we might probably, do a short trade. Yep, it's losing momentum. So because today we are like just focusing on gold, so that is why, I'm just taking a really closer look on the current momentum of this candle right here. So it break through the 5335. Right, it break through this zone just now. So now we're gonna have a closer look. Will it have that kind of momentum to go back up and try it? Hey guys, just a moment. There's a postman in front of my house. Just a 5 minutes. I'm gonna get the parcel from them. I'll be right back in 5 minutes, okay? Alright guys, I'm back. Okay, not bad. Let me try to write an entry. 5335. Yep, seller regaining the strength. Okay, seller is gaining the power. So I'm gonna wait for one more confirmation, and then I'll start to plan my entry. Not going to enter midway. You know, it has proven, you know, the power. 92. Yeah, somewhere around here. Okay. Yeah, so stop loss I'm gonna set at 5346. Okay guys, now is the time for me to calculate the risk that I'm gonna use for this particular trade. So I'm gonna show you, now is the time for me to, you know, use my AI assistant to really calculate the risk. Okay, chat. So currently I'm looking at an entry point, you know, around entry point around 5318.76, you know, for the gold pair. And more importantly is the stop loss. So the stop loss, I'm gonna set it at 5346, okay, where the expected TP would be 5248. And for this particular trade, we're gonna take a 7% risk, okay, of the account of my $3,000 deposit. So please help me to calculate the proper lot size for the risk that is desired to be distributed. Thank you. Okay, there we have it. Yep, so for this one, you know, the position size would be 0.08 for this. So the risk that I'm taking is around like 210 US dollar. Okay, and for the profit, well, the profit is going to be so to make it easy to understand, how much am I risking to make how much money? Right, so that's it. So there you go. So now all I need to know is to 0.08 lot size. Then we can go back to the chart, do our thing. Okay, let's wait for a while. Okay, let's just wait. You know, let it go to 5335. Okay, when it reaches 5335, no, 5318, here we're gonna do a sell. Okay, let's just wait a while. Okay. Patience, patience. We're just gonna focus on gold right now. Let me see, do you guys have any question? Oh, there's a lot of question in the chat box. Okay, we have Wong, Charlie, Brian, Desani, Sam, and Mila. Yep, so Sam actually asked the golden question. So we're gonna wait it retest 5318. Yes, we're gonna wait it to retest 5318, and that would be my entry point for this setup. Okay. So not yet. I'm currently waiting patiently. Right now. And I want to see, is it a lower low being formed that actually proven, the seller is currently having a much more, powerful selling power right now. Okay. So I know that it didn't seem much, but to me, I want the entry to be as precise, as optimal as possible. So that is my thinking. Okay. So Mila asked what's the TP and SL. So for the SL, it's going to be 5346.92 stop loss. Okay, 5346.92. I think that you can actually see it on my setup here. Oops, it's not here. Okay. Is a better view? No, that's not a better view. Okay, one more candle to go. Ooh. Buyer is losing momentum, guys. Buyer is losing the momentum for now. This is why we don't trade during the first 3 days of the shocking phase. You know, when there's shock, when the missile fly, you know, everybody is being biased and they want to go to the market and say that, oh, let's buy gold, let's buy gold, you know, let's buy gold. And the price suddenly, you know, spike up. And then eventually, you know, the price still prefer to find a zone where it is more normal to trade. So therefore you see, you know, if you look at the chart for the past few days, it is, you know, yes, it has a very high surge up, but the seller momentum is constantly, you know, pushing down. So currently we're looking at, you know, much more stronger selling power right now in the gold market. So we do have a range, but one confirmation, second confirmation. Okay, guys, I think that it is actually, you know, enough evidence for me to go into the market and do a short trade. The reason behind is this one. Okay, we already have two solid confirmation right here. You see, which is the selling power is actually proven to be much more stronger than the buying power. So we are not in, you know, we are not selling during a bull ticket, right? Not during a bull flag. So at least for now, you know, we based on the market state, seller has proven to us it managed to defend, you know, the buying power from the buyer. So the buying power from the buyer is kind of, you know, it happens here, but it's not strong enough. You know, seller is constantly, you know, pushing down, pushing down, pushing down. And yeah, it is a good sign that it is a good sign that it is a good sign that the seller is actually currently regaining that kind of strength to keep on shorting the gold market. Yep, we can go in. Yes, we can go in already. Okay. So for now, we're gonna do 0.08. Gonna do sell. Okay. All right, first position in. First position in, okay, 5304.38. I'm gonna adjust my stop loss for now, okay. Okay, I'm still aiming for one, two. There you go. Yep, selling power. Selling power is strong now, guys. Yep, short. So right now I'm gonna readjust the stop loss strategy. Just a moment. So the next question would be, how do I know that I'm gonna be wrong? Because I cannot just hope that I will be right, right? So I need to understand how will I actually be wrong as well. So still, for me, I don't need it to be. Yeah, I think this range is okay. It's fine, and I don't think that I would use this tight as a stop loss because it's probably gonna be hit out. So yeah, so I'm still gonna use this as the stop loss, but I'm gonna base on my strategy. So I'm gonna, pick my calculator, my artificial intelligence assistant to assist me on this one. So I'm gonna show you guys the setup as well. Hey chat, so I decided to enter early because I see, there's a good selling signal already. So I managed to enter at 5304.38. And I would like to ask, by using the same risk of 0.08 lot in gold, I want to understand that what is the stop loss that I need to readjust, based on the new entry. So I told you guys a few days ago, I do admit I'm not, a lot of people think that becoming a good trader is very good in numbers. To be honest, nah, not really. To me, my mathematics is not good. So back at those days, I always use tools, like risk calculator from Forex Factory, from investing.com, and I always use these tools to support me. All I care about as a trader is, the sense and the logic, the reasoning behind my entry. And I let the computers, artificial intelligence to do, the job for me. Okay, so there you go. And I want to be precise, you see. To maintain 7% risk, which is the risk would be 210, okay? The stop must be 5330.6, which is the original stop loss. And if the stop remains 5346, I'm actually risking 333, okay, which is 11.1%. So I would like to round it up. Okay, I would like to round it up to if the well, decision depends on whether structural invalidation change. Okay, let's go back to the chart and see, is the structural invalidation change. Too tight. Go to 1H. It is still here, so I won't change it. This position, it will only invalidate if the price hit, if the price close after 5335. So what we are talking about is this. Okay, I'm going to show you guys. Right now, I've been talking around, saying this, saying that, and maybe some of you may be confused, all right? What is CG doing? So currently what I'm doing is to find a position that will prove, my trade is going to be wrong. Okay, because I'm not, I need to understand how will I be wrong more than how will I be right, because most of the time I will not be right. And a lot of time, trading success is based on how well I know that I will be wrong. So right now, you're actually going through a process of seeing me in real life. How do I actually see, how will I be wrong, for this trade, so that I can take smaller losses. Yes, I'm willing to lose the account, which is the $3,000 account, but still, who wants to lose money if they can make money, right? So this is the point. So right now, what I'm trying to do is to really understand why I do it. Okay, first thing first, why do I want to make a short trade? The reason why I make a short trade is this. The market has already proven that seller has a much more, selling power than the buyer, right? So distribution is much more stronger than acceptance. So based on what you're looking right now, the structure and the power of seller is actually there. The thing that I need to ask myself is, what will make this hypothesis wrong? Okay, what happens that in the chart that will prove to me that no, seller is not strong, buyer is getting stronger? Okay, so I'm trying to get a good glimpse on when will I actually, being proven wrong. Because let's say if the price, goes like this, I want to make sure that you guys can see it. All right, there you go. So let's say the price, goes like this, okay? It goes down, and then it goes here, and then it goes here. It is still very strong signal, okay? But if it goes up here, okay? If it goes up here, somewhere, I think around here, it is still valid, you see? So, but I'm not going that far. I'm going here. Okay, it is still strong selling power that is being shown through the chart. So right now, based on what we see, the compression is still forming, that a strong selling signal is there. So that is why I'm more biased towards, a short trade rather than a long trade. As you can see, it is still happening. Let's go back to the 5 minutes. All right, I've decided to adjust my stop loss. adjust my TP as well. There you go. Okay. Yep, I'm gonna adjust my stop loss. Okay, stop loss is gonna set at 533. I've decided to use the risk as the foundation of the stop loss, which is I'm only willing to risk 0.7%. Okay. Oh, which no, sorry, it's 7%. 533. And the TP I will set at 5252. Okay, there you go. Adjusted. So yep, this is the new setting, so that you guys can have a better look. There you go. So take a close look at this section. Okay, stop loss adjusted 5330.6, 5252.02 as my TP. Okay, so this is the place that I'm gonna do, readjust it. And the logic behind is this one. Because to maintain 7% risk, okay, which is $210, the stop must be around 5330.6. Okay, so I've decided to stick with the risk rather than, the invalidation of the market. Did I do this because that I understand that I won't be accurate all the time, and I cannot control the direction, and I don't know where the market is actually going. What I can only control is the risk that I'm willing to take, even though that I'm taking a much higher risk compared to those days. Normal days when trading, I'm only take like 1% risk maximum per trade, but right now this $3,000 account, I'm taking like at least 7% risk to 10% risk per trade. So it's like high risk trading. Even given the fact that I'm doing like high risk trading, I am still respecting the risk itself that I'm gonna take. I won't be adjusting the risk because of I've changed the entry. Okay, so therefore I'm willing to lose $210 in order for me to make the TP that I forecasted. Right now it is actually moving. Yeah, it is still trying to play with it, but if it's stop out, it's fine. We're gonna look for another opportunity. Right, so meanwhile, while we are waiting for what's going on in the gold, let's take a look at silver. Right, let's take a look at silver. Big part about my trading is that I develop a sense of understanding the market emotions rather than focusing on the market direction. So every time when I look at the chart, the first thing I do is to really try to understand, is the seller stronger, is the buyer stronger, and more importantly, where is the previous balance, and are they actually finding for a new new section to trade in balance. control. There we have it. So silver, previous price that's being traded between buyer and seller, 89 and between 87, right? 87 to 89. So let's just focus on charting first, okay? After overlapping, forms a breakout, being pulled back aggressively. And currently, finally regaining some little bit of momentum here, trying to climb back up to this. But I doubt it's going back because it shows very weak kind of buying power. If you compare with the selling power from the seller, which is here, right? So let's go to 1 hour and have a closer look. There you go, we have a closer look. One technique to use the fixed rate volume profile is to start all the way, right? Start all the way from the end, the starting point of the price that decide to go in balance, and all the way to the end. Fixed range. Yep, it's actually there. Compression still very strong. Let's take a look at the 30 minutes. And feel to go up as well. Yeah, probably a really good time to short it. 5. So as for silver, right? So what I'm actually expecting is this one. So if the market actually move, the seller has, the thing is this, the seller has already proven its strength, okay? That is, having a very strong expansion down, break through that support zone right there. And if the price actually went from here, 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 and then comes back up again, you know, somewhere around this zone. If it managed to break it, I'm not gonna take it. If it didn't break it and then it tests this zone, I might start to pay attention and I might do a short trade around here. Okay, but currently it is still moving, so nothing much to do. Still forming, you know, higher highs, low lows. Let's go to the one. Well, selling power is strong, but you know, entry at this zone is risky. And why do I say risky? Okay, because it is still not far away from the previous price where, you know, buyer and seller agree. Okay, it is still not far away. It has a pullback. Yes, it does have a pullback. As you can see, there's a strong pullback. Just want to make sure that you guys can see it. Okay, here you see there's a strong, you know, climbing up, and there's a strong pullback that wants to go back, you know, into this zone to trade. And right now, you know, it penetrate through this zone right here, but now it's still steadily climbing up. So it is still not yet proof to us that the seller have that kind of power to keep on going down. It is much more alike that, you know, the seller is actually weakening, and is also, and the buyer is actually trying to climb his way back to this zone. So if, you know, if the price actually go from here, 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 and then it start to like come back here, okay, and then if it comes back here and it didn't go down, and it probably will prefer to go keep on playing with this jump. Okay, so this is the logic behind. This is probably, you know, what the market is actually planning. It's based on the balance. It's probably, you know, have that kind of high probability that it is going to react this way. So right now, you know, placing a short trade is actually not a good idea, because as I say, if this zone is not relevant anymore, what happened is going to be this. It's going to be like this, 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 and then goes up, and then goes, keep on going down, right? But it doesn't seem like it's happening this way. Okay, it stopped here, and now, which is the critical zone that we should pay attention on, is actually this one. Okay, this is actually the zone where we will see, does it have that power still? Okay, so if we base on the 1 hour, okay, what would actually make this trade invalid? Okay, so if it actually, you know, went from here and then it tests it, and then it didn't actually go up, it start to form something like this here, then my friend, it is actually a good sign for us to keep on, you know, shorting, where it has a really good potential that the market have switched its regime, you know, to go down. Okay, that is the case, but for now, not yet. Okay, for now, it is still not yet proven to us, you know, that it has that kind of potential. But if it happens, that this kind of structure is being formed, then it means that the buyer is actually weakening. And what might happen is that it will actually go down and then it start to form, a new zone, right? It start to form a new zone. So guys, if you understand what I'm trying to say, please click yes, okay? Please click yes in the chat box. Okay, so that is the logic behind. Okay, that's the logic behind, the setup. So yeah, currently slightly patient. Okay, give it a little time to see, how does this little green candle will react to this price here. If it penetrate one time, two time, overlapping, having difficulties to climb back up, well, it's gonna keep on going down. Because in order for it to broke this, it need to do something like this, right? It need to penetrate up here and then come down to broke this structure, or else currently based on what we see, it is still a very strong selling power. Okay, let's go back to 5 minutes. So my setup for this one is this. We go to the 5 minutes. If you base on 5 minutes, it's interesting because you see that the 5 minute chart, buyer is slowly climbing back up, and you want to test this place. But I have a feeling that when it touches this zone, right, when it touches this $87 zone, it will have a really, quick reaction being slapped down. Okay, so but we'll see how it goes. But right now, I'm not doing anything yet. I will set an alarm, and let's see how it goes. If it didn't manage to penetrate through this zone, it is actually, a good opportunity to trade. Okay, we'll see how it goes. I've set the alarm. Let's go back to gold. Take a look at how this gold actually is performing. Ooh, it's reacting. It's okay, it's still floating around. So for silver, probably looking at a sell trade as well, since the selling power is extremely strong. But the real test is actually from here. I need it to really test it somewhere around here. Okay, if it managed to penetrate through, we might, oversee it. Yeah. I don't think that it's actually going back to this zone, guys. You see, even it goes up, goes down, even it goes back, but I don't think that it's going back. I don't think that it's going back. It is actually, you know, forming a new wave. We try to climb back up. Still, you know, is a strong, is a pullback. We cannot like deny that. But the real test is this one. So here's the thing. First pullback. You see, after the compression, first pullback, and if this is the first pullback, this is what we call expansion. Okay, this is what we call expansion. Remove. From here to here is what we call expansion. Okay, and from here to this point is what we call a pullback. And if we want to see, you know, is the seller or the buyer is strong, the first thing that you need to ask yourself is that how strong does the seller is defending that zone. So right now you see, you know, buyer is slowly gaining the momentum, go back up again, but the real test is not here. The real test is actually here. The real test is go like this, come back here, you know, probably play around here, and then the real test is here. Okay, if here it didn't manage to penetrate through it, it start to like, you know, it start to form something like this, overlapping. Wow, and then it didn't go up, actually go down. Then, you know, after a few sessions like this, it is probably, you know, a confirmation of a bearish, you know, short trend going down until it forms a new zone around here. Okay, so that might be the case. Okay, and based on the current structure that we're looking at, it has a really good probability that this entire zone here is going to be a new zone for it to form, you know, continuity like this. Okay, so set alarm, do nothing much first, you know, pay attention on it, and we'll see how it goes. As for gold, okay, let's see. Not to worry much for this one. It is much more likely that it's gonna, you know, continue to go down. So I'm gonna remove this. Oops, sorry. There you go. Yeah, currently floating I'm selling at 0.08, and yeah, we're gonna let it, let it float a little while and see how it goes. As for now, nothing, much to do about it. It's gonna be like a 10 days program. So if you guys are, just come back to the class, maybe a short briefing, what's going on that we are doing in this class. So currently, what we are doing is actually trading the opportunity window, which is the 4th and the 10 days of a crisis reaction window. Okay, so crisis reaction window means that we are actually trying to take advantage of, the crisis and gold um, patterns that happens, since the 1990s, right? Since Gulf War, since 9/11, since Iraq War, since Ukraine, and today, Iran escalation. So, based on historical data, we have around like 10 golden opportunity trading days for us to take advantage of the market and trade. Okay, so it starts from today, and I will see how the market goes live, share with you guys, the thought process behind my thinking, how I incorporate, ChatGPT, artificial intelligence to do my risk management, my account setup, and also using option market theory um, to show you guys, what's actually the logic behind option market theory. So a quick recap, what is actually auction market theory. So auction market theory is, where we don't try to predict the direction of the market, but we want to understand the emotion and the state of the market. Okay, so how do we actually make money from auction market theory? Is that we try to make money from the shift, the change from buyer to seller, seller to buyer, but we change of the market state. Okay, the change of the market state. And I'm gonna share with you guys a small example. Okay, a small example. What do I mean by a shift? Okay, so the market always goes like this, right? Let's start from here, where the market, is balanced, and then it start to have this kind of crazy expansion. Okay, and the expansion comes with a pullback, and the pullback, is actually not strong enough. So after that, it start to form a new kind of balance, temporary one, and then it start to like go down here again. Okay, go here. See, so it start to form a new zone. So where do we actually make money? Okay, we make money as auction market trader, where we understand where the change actually happened. We don't make money here. Okay, we don't make money here. We actually make money from after we confirm that the market is actually changing. So I'm gonna erase this to actually help you to understand where do we monetize, as an auction market trader. So we monetize on the change of the market regime. Okay, so when do we do our best entry? So the market react like this, a crazy pullback. Okay, and the pullback is not strong enough, which means based on this chart, you can see the seller is still very strong, right? And then it start to go down. Okay, and then right here is where we're gonna do our short position. Okay, so the thing is this, we want to see, what we want to see is this. Okay, we want to see if the buyer, right, if the opponent is trying to, have a pullback, and it is not strong enough to penetrate through that wall, and it start to like, and we found out that it's gonna like climb, start to like slowly climb back up, and we're gonna really benefit. We make money from this change. Okay, we make money here. Okay, this is where we make money. Okay, so for you to understand, we don't make money from here. Okay, this is too unpredictable. Okay, we don't make money from we don't make money from here as well. Okay, we make money after, you know, a confirmation where the price is starting to lose its momentum, and then we took a position there. Okay, so as for gold, you know, what we are doing is almost the same logic as well. You see, almost the same logic that I want to show you guys. It is the same logic. Okay, so same logic, so that you guys can understand better. Price start to go down, right? And then it start to penetrate here, and then it failed, right? It failed. It start to have like a wall. Okay, it start to have a wall. Okay, it is not strong enough. It is still, you know, playing around this area. So therefore, I'm taking an opportunity to do a short trade. You see, right? So we are actually, you know, making money from this area. Okay, we are making money from this area. When the market is proving to us that, you know, the buyer, the counter opponent is not strong enough, we will try to really, you know, pick our side. So for me, based on what I look on the chart, the buyer is currently not stronger than the seller. The seller has a lot of momentum yet. So therefore, I make that kind of, you know, forecasting that it is actually going down. Okay, it is actually going down. Even though that it is still building the momentum up, but we'll see how it goes. All right. Movement is very slow, to be honest. All right, guys. While we're waiting for the chart to do its thing, um, just a few quick update for you guys. If you guys are in our community, you're in Telegram, TikTok, Twitter, YouTube, few things to update, and one thing would be we are gonna start our very own um, podcast session. Okay, so it is an exciting project that me, Pram, Alan, that we've been working on, and we managed to record our very first podcast yesterday, where we discuss about gold, where we discuss about other kind of instrument, and yeah, I'm looking forward to really share with you guys the outcome of the podcast. It is meant to be a 30 minutes podcast. It's not a long podcast. And in the podcast, we will be discussing about, our experience in trading, the reason why we want to trade, the philosophy behind the thought process behind, becoming a retail trader. And yeah, we managed to do it in the studio yesterday, me, Alan, and Pram. And it was an interesting session. No script, no nothing, just pure just pure discussion between trader. And yeah, I'm just looking forward to share with you guys about the podcast. And the idea of the podcast is to really want to share non-scripted, authentic kind of expression, so that you guys can receive information that are much more authentic, much more I think like much more legit, right? Rather than always listen to scripted stuff outside the market. In today's era, we are very easy to be influenced by scripted stuff. Okay, and the reason why I want to do a podcast is to really show to the public, show to the audience, what does it mean to be a trader, so that not only you guys can see the branding, the branded side about RX, about us, but also see the real authentic us, not only on live stream but also on podcast as well. So we're gonna call it a podcast. We're not gonna call it RX podcast, because RX podcast is like too long. So we're gonna call it a podcast, like a podcast. Okay, so I think it will be published coming, I think, Friday. So you guys will get the signal, okay, if it's Friday. Now before that, let us take a look at this one. We might be stop out for this position, but it's fine. I will open another position if it really hit the stop loss for this one. Yep, so the total risk would be 210, and I think it's fine. Okay, it's still within a measurable loss that I'm willing to take. So I'll see how it goes. But it seems like, well, obviously, the hypothesis that I make, I think, is obviously heading toward the opposite direction. It is just part of trading. So for me, I would rather close this position and wait for another entry, which is the upper line right here, when I'm gonna show you guys here, okay, around here. So but let the market do its magic, it's fine. But based on what I see, it is already invalid. You see, the market is already forming. But just to confirm, do I want to close the position? Let me take a look here first, okay. Yep, a better entry would be somewhere around here. So if I'm being stopped up by this position, it's fine. I will open another position here to hedge the loss. It's fine. So do it somewhere here, right? Okay, so this would be my second position if I were to be stopped out by this current position now. and that would be the second position. I'm still going short for gold because I see, there's still a very strong momentum from, shown by the seller. So yeah, that's probably it. So before we close our class, let's see, do we have any question in the chat box? Cora said market not trending clearly, better cautious. Well, yeah, the market is actually, to me, I don't trade the trend, so it's not really relevant to me. For me, I'm just trading the market state. So I am actually trying to trade market acceptance. So right now, just now when I'm doing this trade, right? When I'm doing this trade, okay, that one is not trading market acceptance. This is trading market rejection, okay? This is called a rejection trade, okay, where I am forecasting the price will go like this, and I keep on going down. So this is what I call by market rejection. So, but a big part about my trading strategy is market acceptance, okay, where the market, is much more preferable to trade within acceptance. So to be honest, the probability of making money in the market is much more higher when you trade acceptance. But for this particular experiment, I'm willing to take, some risk, some risky move that is rare but is risky in the wartime, because in wartime, the price reaction of extremely dramatic, you see, it is dramatic. So in you see it is dramatic. So in opportunity phase, when you're trading gold in crisis time, you will have a good chance to ride, price rejection, where, the price actually really, suddenly went from here, exactly really, suddenly went from here, accepting here, accepting here, accepting here, and then suddenly go all the way down. In during crisis time, here, and then suddenly go all the way down. In during crisis time, always, gold happen. It always happen this kind of structure. So to me, it's okay to really grab this kind of chance. But it seems to me right now, the price is, prefer to really trade around this particular zone. Okay, but we'll see how it goes. If I'm being stopped out, then the next high probability entry would be this one. Okay. All right. So yeah, last but not least, let's take a look at the Telegram and we'll see how everybody's doing. Lavender asked at 3:35 p.m. just now, so still can short or not? Still can do short. Well, yes, still can, as long as you're using the second position. Don't entry right now. Okay, I was placing a bet for market rejection where I'm expecting a true break, but the true break didn't happen. It actually, just break my hypothesis, and now it's climbing back up and to test the level, which is the middle one that I'm placing the second position, where you see right here. Okay, the second position. So forget about this position. Okay, forget about this position that I'm actually, close to the stop loss, but pay attention on this one. Okay, this has a higher probability trade, and the price, the entry point for that one is actually around 5335. Okay, 5335. Yep, almost being stopped out. Almost. So the loss would be 210. Well, probably gonna take my first loss. So we'll see. Let's see how it go right before we end our live stream. Yep, gonna be stop out soon, man. First stop of the season. What do you guys think? Is it gonna be stop out? I think it's gonna be. Yeah, almost there. So the stop is like 5330, and currently it's around like 5328 already. So but I won't be closing this position though. Yeah, all right, guys. I think that is probably for today. The market is moving in a way that is much more slower than I anticipated. But still, I'm gonna be focusing on the gold market starting from today onwards. It is going to be a 10 days program, which is gold under fire. Okay, it's gonna be a 10 days program, and we'll see, you know, can we really flip the account together? Okay, so it will be a 10 days program, and the experiment of the name of the experiment is actually called Go Under Fire, a live $3,000 trading experiment. And yeah, this is the account setup, and we'll see, how can we actually flip this $3,000 within 10 days time. We are currently in an opportunity phase where it is actually the 4th and the 10 days of a crisis. So I'll pay attention on the macro news as well. And thank you guys for attending the class today. Slightly disappointed with the volatility of the gold. I thought that today we're gonna have some fun, riding the wave together, but still we managed to take one trade. But it's not about taking a loss trade. It's about like the market reaction of the gold is way slower than I anticipated. So maybe tonight I'll come back again and see how does the gold market react, and I'll give you guys an update in the group. But last but not least, thank you very much for joining our class today. My name is Kelvin, and thank you very much for your support in Profit in Peace in forex. And stay tuned for a podcast. Okay, stay tuned for a podcast. And guys, if you really want to learn about how to trade, how to think, how to analyze the market with the lens of option market theory, and if you're interested in really learning the craft of trading and becoming a profitable trader, feel free to contact Grace in the chat box and also the customer service. We will be there to serve you, and it is always my pleasure and honor to equip you with the knowledge and skill set that you need to become successful and consistent in the path of retail trading. Thank you very much. I'll see you guys tomorrow. All right. Thank you.